And it's not just Greece that's facing uncertainty. There's uncertainty in the Eurozone that has investors around the world sitting on the sidelines. But which country's debt poses the biggest threat to the Eurozone recovery? George Washington University professor Scheherazade Rehman explains where she thinks the Eurozone is headed next.
I have to tell you, it's really not about Greece anymore. It really is about Italy. Italy is the key now. So moving forward from this point, we are looking at a real crisis or possibly something abating itself. Look, something has moved in the market. All of a sudden, this Euro drama that we've been having for the last 2 years has subsided a little bit. The markets have calmed down a little bit. The European Central Bank is doing its job. It's buying bonds, unlimited bonds for Spain and Italy, and it looks like the Germans are coming around.
There's two parts to Spain. One is the so-called bailouts of the banks in Spain, and the second half is this request that international investors would like Spain to request an official bailout. However, the Spanish government has not done so quite yet. Do you anticipate that they're going down the road of a full bailout, or are they going to maintain this wait-and-see attitude?
All right, so we have a new modern language for the word bailout. We're now calling it a credit line with conditions. And so that doesn't scare the markets that much. And Spain definitely wants to go the route with having a credit line so that its debt does not get worse. And I think that's the way they're actually going to go with this.
You mentioned the ECB, the bond buying program.
Right.
You call it unlimited. I would respectfully say that there are some limits to what they can do. But regardless of that fact, I mean, this is a fairly positive step move forward that we saw versus where we were just a year ago, because back then we were arguing whether or not it was even legal to go out and buy bonds on behalf of different European sovereign governments. But today, that argument seems to have subsided.
You see, this is the whole shift that happened last November when Mario Draghi came into the European Central Bank. For the first time, the Europeans are doing crisis management. And this is what this is all about. They have to deal with Spain. And why? And why is there so much pressure on dealing with Spain? I'm going to come back to Italy. Spain and Italy are joined at the hip. If you look at the 3-year bonds of Spain and Italy, they move in tandem. So our big fear is that if something bad happens in Spain, it's going to happen in Italy. And we've talked about this before. Italy really is a little bit too big to save. We're going to go back to the dark days. So all the focus is in containing Spain right now.
George Washington Law School held a symposium, and there was a lot of interesting topics that were discussed. I want to just ask you about one of them, the concerns about the future, and I'm sure Italy probably ties into that a bit.
Since I was the speaker for the Eurozone for the symposium, I can tell you what I said, and I think that what has happened right now is the markets are breathing. They're breathing a little bit better right now, partly because there's a European banking authority that's supposed to be put into place by the end of 2014 with about 6,000 banks under its preview. And what this really does, it allows the European Central Bank to become a normal central bank. It has access to bailouts directly to banks. It doesn't have to go through the governments. And so markets are feeling a little bit more easy. So the real trillion-dollar question or $100 trillion question is, will this calm stay or is it just temporal? I don't think we can answer that question. And that was the central question at the symposium on the European issue. I think we're going to have to wait until the Italian elections next May. And that really is 8 months down the road. That's going to be the sign.
I was going to say these markets might not have the patience to wait 8 months. But look, if our viewers are watching from China or America or Europe, there's an awful lot of cash that's been sitting on the sidelines as every investor, whether you're an investor or just an employee in the world, we all know what's happening with Europe, and everyone's waiting and seeing before they invest. Is all this cash just going to sit and wait, or is something going to move?
So a couple of things are happening. First of all, the cash is actually leaving Europe right now. It's leaving Spain, and that is a problem. There's huge pressure on the banks. The problem is far from being resolved. We are just feeling a little better that they are actually beginning to address it.
It's less bad.
It's less bad, if you want to use that word, yes. And so we have investors now waiting to see what happens. And the big yardstick again is next May. That will throw us into a roller coaster ride again, because the Italians are not known to pick the most sober leaders, and we hope this time they just might pull that off, but it doesn't look like that's going to happen. There's not enough influence by any party to actually make a coalition. And so we are resting the entire world's growth on one premise, and that is we don't want to lose Mario Monti because without him, Italy is going to get hit by the markets. So we are hoping that there is no coalition government that can be formed, and they're going to bring Mario Monti back to form a coalition government, and so we get the best of all worlds. We get democratic elections, but we get Monti back, and the world is at peace. Now, I'm feeling very jittery about that being the plan to keep Italy safe, but there is no other plan on the table right now.